nothing to bear and nothing to win. Oh yeah! Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on into the live. Let's check out the charts, shall we? On this low liquidity Sunday, March 12th at 10:22 p.m. my time in Asia, in Japan. Let's take a look at these local pitch fan fibs. So we're meeting with the resistance of the diagonal fib here at the 236 level. Here's 382.5, 0.618. It goes from the mean, which is 0 here. So we're approaching a mean reversion idea, the mean being this red zone. So we previously got above the mean and now we bounced back to the mean. Now we're going the opposite way. Are we going to come back up to the mean again? I would say we double bottom and go back to this 382 first based off of these fibs. The 1618 region would be a nice juicy place to go knock out some longs before they come up just off the fibs alone. Let's go to the liquidity, shall we? And that coincides with the liquidity we were talking about from yesterday down here at 19.3. It's getting stacked down below here. They're trying to induce some more in. It's still kind of sparse in this region. They have been making their way up to this region. We talked last time about the possibility of these trap shorts, which they did come up and get. And then we were at the equilibrium region, which we said we'd wait for it to come up or down to consider longing or shorting at that time, and said range trading would be the play for the weekend. So it would just be slow price action. We didn't give a call from yesterday. But let's just go into see what the imbalance is at currently. So we have a minus $20 billion in short liquidity imbalance to come back to in this region on the 6 days of data on the 1 minute time frame here. Let's leave that open and go check out the heat map on the higher time frames, as we do every single day. Once again, thank you for coming on into the live. Hopefully you get some value out of these high block things. It is a $70 a month value, and we give it to you every single day for free, so you can get a little bit more insight into the charts. So for that alone, thank you for stopping on in. So on the 12-minute time frame, or 12-hour time frame, this is what has been induced. It's pretty even Steven on both sides. I normally skip the 12-hour. It's not really that insightful to me, and go to the 7-day. Now on the 7-day, it looks like you have 5 billion down here at 18K. So it's slightly more stacked up in this region since they previously took all the longs out here. So this is just on the 7-day time frame, though. They've induced, I would say about 10 billion down here, and about 15 down here, and you have about 25. So it is imbalanced to shorts on this time frame, as they came and took out the longs here. Now the 7-day is very sparse by comparison, because you have larger pools at play from the monthly, 3-month, 6-month, yearly, so that's where we're going next. So they came down into this region and took out all the liquidity pools. We were talking about it getting caked up, juicy, nice and fat on the monthly and 3-month time frame. We were wondering if they were going to come up and take out the 10 billion that or so that was up here before they headed down, and they just headed straight down. They just couldn't wait to take it. And yeah, so you've previously had some. You still have 14 billion down at 19.4, 10, 19.3, nearing 10 at 19.2. So you still have this stacked liquidity down here, and this also coincides with some fibs, which we'll get into later, but you still have room for this to get nice and hot before they come back up to it as well. So they could induce some more shorts here before coming up for sure. So let's go to the 3-month. So the 3-month is still mighty hot down below. You got 32 billion at 19.4, 39 billion 19.2, 41 billion 19 even, 18.8 is 48 billion, 45 billion at 18.6. I think my head's in the way, but 18.4 at 47 billion dollars. And it continues that way at 36 billion and 30 billion even, down to 18K before starting to taper. So you have this large amount down below, just a hop, skip, and a jump away. So generally you would see a double bottom form as well. So is this long idea still? I would wait for some divergence to form off of a liquidity grab here personally. But yeah, because you got very little above, almost single digits up here. But the large thing that's still at play. We're gonna skip the 6-month for a moment and go to the yearly time frame. So we were talking about what's up here. You got 72 billion at 24.4, 18 billion 24.8, 36 billion at 25.2, 178 billion at 25.6, 110 at 26 even, 78 billion at 26.4, 130 billion 26.8, and 73 billion 27.2, and 120 billion at 27.6. And it starts to taper to 74 and 63 as you go up. So this is what's holding us up from dropping completely. And if you look at this from afar, you see all of the pools kind of that were starting to thicken, get chewed up here. So we're at almost at the halfway mark. What does that mean exactly? Let's go into a fib level time frame chart to take a look in more detail. So we took the fib from the absolute low to the absolute high to get this fib level, which also coincided with the fair value gap, which we've had there for a long time, and it wicked down into that region and bounced out, which went below the 1618 of this trend-based bearish fib extension tool. And so it bounced off the fair value gap here, which is also the 0.65 region of this larger fib pocket level. And we were saying that if it gets up to the 1382, which coincided with the bubbles, it would fade there, which it did. And now we're just chilling there for the second time hitting it. It's actually the third time you hit this 1382 level. So are we going to continue higher? Just based off of pure price action history, you kind of go back down before you go up. You create these W's and M's before you do it. So I wouldn't necessarily, as I said before last night, we wouldn't be taking that range trade there, because you'd wait for the bottom double tap before you can take a long hit. So yeah, let's start looking at the probability, shall we, on the stochastic RSI and the daily. So the daily is just starting to take off on the stochastic RSI. You had the Williams in green starting to curve up here, which is quite nice. You have the MACD coming down into the Williams territory saying what's up. And you got the money flow quite low previously in the green, starting to come out of the green beneath the RSI, which is good if it likes to gravitate up to the RSI. So I'm liking what I see on the daily, but it could come a little bit lower. It's still not quite in the green just yet. But I like the Williams position, and I like that it's starting to curve up a bit. We'll see how that interacts on the lower time frames when we switch on the multiple time frame stochastic. So the one thing that I'm starting to see here is the money flow on the 4 hour is starting to go high while the RSI is staying flat. Generally, if they diverge like this, like as they did back here, you start to see the money flow come back to the RSI as it did here too. So let's make the price action a little bit more dramatic. So as you see, it started to deviate from the RSI up here, and it came collapsing back down on itself. So are we seeing this again, where it's deviating away from the RSI? I like to put the money flow and the RSI together. As I said in previous streams, that the gray nature of the money flow is a subconscious of the RSI. The money flow index is better known as the volume weighted RSI, so that's why I like to overlay them like that, because you can see disparities between them, which end up causing attractors to occur between them, which could bring this 4 hour down on you, as we are overbought on the stochastic RSI, and we're at that fib level, rejecting for the third time, hitting this region. So we could come down and hit this just not looking at the 4 hour alone. Now we look at the 6 hour. 6 hour also overbought. When you get the 6 and the 4 overbought, it's not a good place to be for a long. It's a place to consider taking your profits and going to the other side. The 12 hour could give you a little bit of legs here, but it could top out at the 50 here and start to curve over on you. You are getting a golden sun, rising sun on the 12 hour here. Previous one did play out over here, but you had a lot more things going on at that time in terms of confluence for the 618 here. So we're in a bearish sentiment. This may or may not occur. I wouldn't put much stock in it as of yet. We still haven't gotten our double bottom either. Here we had the double bottom formation before we came out. So in terms of market structure, it's not a good place to think of that being true. And let's go to a lower time frame, 1 hour. So the 1 hour's got that alarm on the Williams saying that you could get suppression here as this double tops and fails on you. This happened before on the S&P, and we called it perfectly when we said it needs to hold that region, but the alarm is telling us it's coming down, and we projected that downside to a T. So is the same thing going to occur here? We had the MACD staying at equilibrium at 0, just between everything. It could dump on both of these right now. Just off the hourly, meandering back and forth, not making up its mind. The 1382 here, this fib region, is a place where you would find a thing to occur. It's also the even numbers of 20,500, which generally tend to have the 500s, and the even numbers tend to have something occur there. So that's just off the hourly. Let's go to the 30-minute. 30-minute coming down in a nice manner while not giving back much of the price action. You could try to get another push up on the 15 with the 30, but just based off of what I'm seeing here. So the 15-minute is low. I didn't even know that without looking, but now I knew that just by seeing the 30. And you're starting to see some bullish divergence on the money flow and the RSI here. So you're getting hidden bullish on the RSI and regular bullish on the money flow. So they're trying to keep this play going for the 15-minute here in conjunction with the 30. Here's where we can throw on our higher time frame and lower time frame stochastic to take a look at what is cooking between the interactions of momentum. So if we look at this, we can see the current time frame is in blue and purple. It's starting to come up and try to curve this higher time frame of the 30-minute. The 30-minute is trying to come down and suppress the 15-minute here. And you're also seeing the 5-minute work in tandem with the 15 to try to curve the 30 on this time frame. And now if we go to the 30, we'll see a different narrative because the time frames will shift, and the 30 is the one coming down, as we said in the previous image, and the 15 is also coming down and it's above it. And the hourly is actually going up right now, so the hourly is kind of trying to curve that 30-minute in conjunction, but also meeting with the suppression of the 15 and the 30 right now. And you go to the hourly, and the hourly is getting this. It had a previous upward momentum, but it's the 30-minute in yellow and orange, and the hourly are meeting with resistance on the 4-hour. So that 4-hour that we said was lurking is possible to suppress you here. You also are getting 3 hits to the high, most notably here. 1, 2, and is this the 3rd hit to the high? This is the power of 3s. You can look it up. The power of 3s, you get that 3rd hit, and then you get that rejection. Is that the possible rejection on the 4-hour there? You're seeing a red vector candle, which means a high volume player exited the game here. A vector candle is 200% of the previous 10 candles of volume combined into that one candle right there. So somebody is exiting their position there of note. We did see previously here hidden bullish divergence on the money flow, and then that started to go up here for that 3rd hit, and we're meeting with rejection on the 1382. We could turn off the these higher time frame, lower time frame now. Everything is editable in the suite, so you can turn it on and off. You don't need to leave it on at all times. You use it to turn modes of vision, like trying to see like the predator through different heat signatures of price action. So this is the bearish trend-based fib extension tool will show you again and again and again how to do this. You basically take your trend-based fib extension tool, you find the impulse to the downside in this case, you go all the way to where the impulse ended and click that, and then you go to where it tried to retrace to at its highest point. And that will project for you a bearish projection, which if it goes down to those levels to a T. And you find the 236 as your entry point, and boom, you could have gotten out at the 786 and reconsidered. And then you see that at the 706, we reached back up to it. The trapdoor was opened at 22218, and boom, we broke down to the 1618 region and below into the fair value gap we went over earlier. And so now we're reaching with that resistance point to continue possibly on the bearish traversion to the downside at the 1382. Are they going to re-enter their shorts at this level and exit their little mini long scalps? I have no idea. Let's start turning on the Momentum Master Ultimate and A. Whoops. So where were we yesterday? So yesterday we were hanging around here on top of the cloud as it was thinning. After a large dump like that, I wasn't so confident in giving out the long play, but we did say every single time you break through the cloud, you come back, you kiss it, and then you go up. That's generally how it works, and the cloud was thinning, so you could have, if you were a high-risk weekend trader, you could have taken this idea alone on the cloud thinning and coming back in this direction, in this manner. And you could have taken that for 2% gains if you were so inclined. It wasn't my kind of cup of tea, so I didn't give that out because the baselines were not beneath the price. I like to see the baselines come and scoop beneath the price in the manner that we showed 2 days prior. And I was seeing bullish divergence on the hourly as well here. So I'll show you what made it even juicier. We were at the bottom of the K-hole, the Keltner channel here, and we had the hourly bullish divergence. Pardon me, I don't know why it's getting... Okay. So we had the hourly bullish divergence here on the money flow and the RSI. So this was a good... And the baseline's below price in such a manner. So this, to me, was more of a easy play to take because it coincided with the confluence of the fair value gap and the golden pocket of the higher time frame. So that was a good long for me, and I took that up to there, and you saw that 2 days ago. And we started to get the hidden bearish divergence on the money flow, so it was time to get out. So, and we said when you break the cloud, you come back to kiss it. So that's what we were doing. We were chilling around here, and I said that we're in the range, and you want to find that you want to find it come at a discount and try to get a discount price if you want to truly go long. We're starting to see the hourly hidden bullish that was starting to play out, but it's meeting with rejection on that vector candle that got sold off, and you have the Williams alert. So I'm not really feeling that it's going to squeeze necessarily based off my indicators here. But if you go off the liquidity here, we're just a hop, skip, and a jump from this pool up here at $20,868. You have a bunch stacked here of 50x, 100x, 25x. It's a very layered amount of money here. Let's try to zoom in and see what it looks like when we zoom in. Okay, so you got a $226 million character up at 20,878. That would be a cool guy to pop, a balloon to pop. And you got some more right around the 20,918 region. So this entire region is kind of also caked very nicely. So it goes all the way up to 20,999. So this all the way up to 21K is caked up pretty good, I would say. So are we going to double bottom down into this region first, and they're trying to see how willing they are to hold on into the red, and then they go take these guys out before finishing the job? I have no clue. there is a lot of a gap down here that doesn't justify the price action differential. So we could see just a straight squeeze up to here before we go down. So we could break up here to the 618 region at. That also coincides with this pool here of the impulse. So that just looking now, adding the liquidity into the mix with the indicators and the fibs and everything, if we were to break up from this region, a place to see a fade on the impulse to the upside if we were to break out would be at this 618 region at 20,968. That coincides exactly with the pools we're seeing stacked up here as well. So it's quite interesting to say the least. We are starting to see the cloud shift and turn towards the downside. This volume weighted moving average formula cloud gives you a heads up on when the momentum is shifting out of your favor. So this would be your kind of, and you got the baselines above the price starting to express fatigue as well. So are you going to see the 4-hour suppression kick in about now? This would be where you find that range high. So if you were to take a fib from this local range and you switch it over to regular basic fib levels, and you see the 236 level. 236 is your entry. You find 236 as your entry, you write it down to the golden pocket. So you would find this here and you would write it down to here and take about 2% out and just call it a day for a scalp. This is how a range trader would scalp a range. So I'll just do it just to give you an example. And you take a risk and you set your stop loss above a certain region and you do your risk calculation and you put your take profit down below and you do stuff as so, and you say, do I like this risk reward ratio or not? And you say 3-1, not bad, and then you just do it and no emotions are involved and you just let it sit there and percolate. And you do that based off of this simple range trading idea. And we'll just leave that up for a minute. And then we're going to go to, because we see the cloud shifting and it just does what it does. And you got the 2-hour. Let's take a look at a 2-hour. We haven't done the 2-hour on the live in a while. So we reached above we struggled above the cloud. We broke through the cloud slightly. And now we're starting to, the cloud is getting slightly thin. But we could come back down into this cloud region on the 2-hour. It is still thick in purple momentum, which is sell-off, downside momentum to the downside. And the 4-hour also coincides with this region. So likely if you double bottomed here or found a way down to the bottom of the range, you would see this cloud kind of curve down and come down to this region a little bit too. So you're still seeing this thick momentum on the 4-hour as well. The idea of just coming straight up here just doesn't seem like it would occur just at this moment in time to me, based off history I've seen, but I could be completely wrong at this point. Let's check out what everyone's doing. Yo, thank you for coming on into the live. Sunshine, Rayman Crypto in the house. Yeah, if you shout out, you can get an invite link to Rayman Crypto's free Discord. We have a Momentum Master channel in there. We have a lot of cool analysts here as well, giving out their trading advice and their paid tools which show influx and outflow of volume. So it's a bunch of cool people in there. I'm sure some Sunshine could hook you up with a link to how to get in there if you don't know already. Yeah. We also use the Momentum Master Suite. There's a link in the description. This will give you can toggle through all of the tools that we are going over today at your leisure and say, what is he looking at when he's talking about the trend cloud? And you could throw on the trend cloud here and read about it. You could also look at the baselines and say, what are the baselines? What is he talking about there? What is the Williams? He talks about the Williams a lot. Oh, okay. And I have a schematic which I made by tracing over price action in detail in Illustrator so you could get a little bit more detail of how that works. And we have, if you join, we have a Discord with a bunch of pro traders which are there to help you as well. So please check it out. Momentummaster.info. So anyway, we're going to see possibly this short squeeze up to the 618 at this very moment, or the fade down to this region at the 618 here. It's the higher probability in terms of the 4 hour would be to fade at this time, because it is at that fib level and it's reaching that third hit to the high kind of idea. So we're going to take a look at let's go back to the 3 month, just leave that open. But this is the weekend, so volume is very sparse, so they do wick and whack the price action in a manner, and this is just for entertainment purposes only, just to give you a heads up. Yo, what's up? Wendy and Smurf, thanks for coming on in. I think we got a good pocket for where BTC's at right now. It could I don't expect any short squeeze like the likes up to 618 until the weekly candle close probably, but you never know. My cat wants to say hi. She's being a little bit feisty because she wants to sleep on me, but you're shedding hair all over me. All right, so let's take a look. Let's go a little bit more into like what happened with Total and all that fun stuff while we let that sit a bit. So with Total, I was looking at Total recently. It was pretty cool. Let's check this out. I don't even know when I put this out. I know it was on the live, but one cool thing was we reached into the pocket, boom, and bounced off the 618 for Total. And this happens to also be the weighted moving average here that we're trying to hold. So we're trying to get, previously we were up here, and I don't know what I was doing with this fib here necessarily. That was kind of on the way out of here, and then got rejection at the 786 and broke down at the 706 here on the downward trend base fib, so retracement rather. So if you go here, this is one thing we can also do here. Let's do a trend base fib extension tool on. This was kind of an interesting thing. So we went to the 1618 region, and now we're retracing back up to these levels on the bearish fib, trend base fib. So we're attempting to hold this region, but you could realistically find a double bottom into these pockets before, if you were going to continue to the upside from here from Total. You did have that Silicon Valley Bank stuff happen and a bunch of other things going on with the Fed. You have an emergency meeting on Monday, so Monday's going to be interesting to say the least. And let's look at the USDT dominance. So you have the dominance go up. When the dominance goes up, it generally signifies that there's been people kicked out into USDT, or they've gotten out of their trades to sit on the sidelines in USDT. So they've either been kicked out into USDT, or they've been exiting by their own choice into USDT, so that they're sitting on their dinero. And so if the USDT goes down, if this is like a cup and handle retracement thing, then you'd see it retrace on the daily time frame down to a region somewhat into this vector candle at some point, which means they would put their USDT back in to some assets of some nature. So up for USDT, they're sitting in USDT. Down for USDT, they put their USDT into something, simply put. So now we've seen the USDT rise, the dominance for the USDT rise, meaning that everyone is in USDT. We're currently seeing people try to put that USDT back into the market slightly, which would mean a retrace of some nature, which is your good old cup and handle play. So how far into this do they go? This is a daily time frame, so we need to go to a more minute time frame to see how much that would be. And you do get these crossovers of the baselines, which tend to play out as well. So we currently went and recovered this entire 4-hour candle. And we still have some 4-hour candle goodness down here. Let's go to a lower time frame to see how much of it is fair value gap. Pretty much all of it. So we can just go like this. Go to a lower time frame. So it traded back in this wick area here, so we could move this down slightly. So that's one, and this area that already got recovered. Yeah, so those have already been recovered. So the next one to recover is down here. So this would probably coincide with the bounce to go up to grab that liquidity at 21K region. So if and when they go down to here, this would be the USDT going in to cause the Bitcoin to go up. So the Bitcoin dominance would also go up at that time probably too. So the Bitcoin dominance has been dropping because people are not maybe interested in getting in so quickly. Sorry, my cat's meowing. Give me 1 second. Alright, so we got that. We had that retrace for the Bitcoin dominance. That's the thing we were trying to look at here. It's kind of a similar structure actually. So the Bitcoin dominance and the Tether dominance are similar in nature at this time. This. And the similar thing, you can go down to the adaptive before Bitcoin starts to take some dominance back. And yeah, we saw the S&P kind of drop out into back under the trend line, down into this fair value gap region that we had as a confluence zone. So that became reality, and that's going to probably go down more. Looks like we have a rocket ship too. So are we going to see like a relief rally to fake out everyone that's late on the shorts to try to see some sort of fake out up before they go down again? We did have a rocket close and lock in on that 4-hour time frame for the S&P. Interesting to note. We have seen that happen again, and then they gap down before they shipped out though, so it doesn't necessarily mean that it goes up from that point. They still have more of this vector to recover on Monday. The dollar. The dollar looks like it caked in something. It came all the way down. I was looking for some sort of bounce in this pocket. It came all the way down to here. Let's go into where that is locally in the fib levels. So you're into this pocket that's from this region here. And yeah, we're trying to find some sort of opposite bounce there, but we're going to just go to the fib levels on this impulse alone. So let's just do so if we come back down to the 236, so for the bullish trend-based fib extension level, you'd have to see this hold, this level at 103.368 would have to hold for the bullish idea to form. Otherwise, you could be getting shoulder, head, and shoulder kind of thing. But even the shoulder, the head, the shoulder that forms here, if we go down, could just be a fake out to go higher, because this is the trend-based fib of the bullish trend-based fib if you hold this level still. So we are making It looks like the 4-hour is still good to go on this. You're meeting with the rejection of this fib level pocket, and yeah, with the whole banking system problem, and then they're going to have the emergency meeting, there's going to be definitely some volatility coming in on Monday. What is that going to do to shift it up? We'll cross that bridge when we get there, but definitely this won't be open until Monday New York time, so we'll just keep our well, so there we go. It started to play out a little bit on Bitcoin, but this is what it is. I mean, you know, people would say it's a rising wedge, but it's just the first part of a W, so it just drops down to make the second part of the W. Once you start to know how these patterns are, you don't need to fixate on the trend lines. You can just see the pattern without putting lines on the chart necessarily. Also, these indicators will give you a little bit more fidelity to the image than trend lines can. Trend lines can be deceiving. So you had the baselines above the price that was showing the fatigue. You're reaching the top of the K-hole, better known as the Keltner channel. You're getting the thinning of the cloud. It comes back down to the bottom of the Keltner channel. That's just what it does. That's what price action does. It creates its own dynamic range and then starts to gravitate around within that. All right, I think we did a solid analysis for today, and I want to keep you guys short but sweet. Do you have anything you would like me to look at? Not a fan of losing an hour thanks to crypto. Oh, daylight savings is coming back? So wait, what time is it now in the East Coast? Is it like 11? Is it 14 hours? So it'd be like 10 a.m. or something? Or 9? Do you guys have anything you want me to take a look at while we're here? Let's take a look at Matic, just for my man over at the Momentum Master Discord subby guy. He likes to trade Matic. Getting overbought on multiple time frames above the 4-hour by the looks of it here. Just off the bat, you're seeing this thing here, this little bit of happiness up here that it could be aiming at in terms of a short squeeze, like liquidity grab, similar to Bitcoin most likely. But yeah, they could be trading alts while Bitcoin ranges down. As Bitcoin ranges down, maybe they take their liquidity out of there and start trading some alts as it's ranging between this for the next 12 hours or so, and so you could see some sort of altcoin something or other if it holds. Sol had the rocket ships not play out at all and just went straight to the downside. ETH respecting some levels from before. Let me just clear that though. Anyone have anything they want to take a look at? Let's see. Yeah, Matic. All right, so somebody else is calling for Matic, so let's just do Matic a little bit more justice. Justice. So we could take our fib retracement tool and go from the impulse. Key is being impulse. So you could go all the way back here, but then it gets like it goes down here and it's not, it's a longer term play. So you're trying to look for where is this daily going to come back to. Like we were previously looking at that for Sol, and I was talking about that even though there was rockets playing out, that we'll look at Sol too. So basically you had the 618 here and then it started to dip into that, and it's bouncing off of the adaptive and the weighted moving average. This is a really nice kind of configuration to have these two in your favor as support, and you're having that golden pocket situation here at the bottom of the Keltner channel on the daily. The daily is still okay in terms of values. It's at 34, so it has the OK symbol down here at your screener. So you can get all this information in an instant, because who wants to spend hours in the charts? And then you have like go to the 4-hour time frame, you broke through the cloud, you have that, like what I've noticed it does, right, on any asset, it's not just Matic, but you'll pierce the cloud and you pop it like a balloon, and it's letting the air out, and then they go back down, and then they do the double bottom, and then they'll come back up and pierce it, and then they come back and retest it, and by that time it will have thinned, and then you take that retest. And so you could be scalping these entire things. Like if you were to take a crossover event or a signal from the phone saying 5 time frames are oversold, you could take this up and know that it doesn't go up forever, because it just doesn't, and then also see that the cloud is not in your favor, and so you would know to just get out, at a region like this, and then just like either switch sides or wait for that double bottom, and then get back in, and then you could do 13%, and then you could do that, and then you could get 7%, and you can compound. And there's a lot of guys in the Discord right now that just scalp the living daylights out of Matic and other coins using these signals, and they provide you with the insight that you can't get without them. So yeah, you got the double bottom here. We have that bigger pocket that we're coming out of here. You have the 706, 0.65, 0.66, 0.65, 618. We got above the 618 and the cloud. So if we pierce up to this, it's not the point to do it now, because the 4 hours overbought and the hourly's overbought and the 15 minutes overbought. So you're seeing this impulse that's possibly going to go up to this fair value gap region on the 4 hour. We're going to confirm what that is actually. So we're going to go over to that region and then lower the time frame to see how much of that gap is filled in by price action here, because you can get more precise. So right here, but that wasn't part of the fair value gap, but so this got all filled in really by price action. So there's one there, and then there's one here. And then we'll go to a lower time frame. And so while people are fixating on the right side of the charts, what's happening now, you would be looking at the left-hand side of the charts for these gaps and these vectors and these things where it would be coming back to recover liquidity. And so you're looking for these liquidity voids, better known as fair value gaps, where it would be aiming at. And then those coincide with something Fibonacci-wise, or something with a moving average or something, and then that could be your confluence you need. And so this was a impulse retrace here just on this small thing, so we can see how strong this impulse will be based off of that. We go from the impulse to the top of the impulse to the retrace, and then that will give you a kind of zone. And so it looks like the one zone coincides quite nicely with a fair value gap. So you could come up, if you hold above this 706 and you don't get rejected on it right now, like you could just get rejected on this and come down to the 236 right here anyway. But if you're already in from down here or something, then you're just monitoring to see, does it hold this 706 or 786 level? If it holds these, then and goes beyond the 786 wall that could get sold off at, then it will surge up to this, which coincides with the fair value gap, and then you could look at for some sort of relief at that time. So you got kind of these two possibilities here. Since the cloud is thick, if you were to go up, your chances of it coming back to kiss that cloud are almost 100%, just where would that be? Is that going to be here? Is it going to be here? That's where your risk reward ratio and stop loss calculator come into play. So that's what I'm seeing for Matic anyway for the 4 hour, because the 4 hour is spent just as it is on Bitcoin. So you could see some sort of meandering around. I think the 6 hour is most likely overbought as well. Yeah, you got that overbought nature, and you're meeting with resistance on the cloud on the 6 hour too. So that's Matic. That's Matic in a nutshell. Let's see. I'm missing all the chats here. Really appreciate the stream. All of this has been a pleasant surprise and a bonus. Thank you. Hello, Abominable. Top of the morning. All right, let's see. Yes, total bonus. Good to see you here. Such a good trader you are. Ozarks. Nice. Danny, would you please explain to us what candles you are using here and why you use them? All right. Yes, fair value gaps. All right, so here I'll just open up something that I have in the Momentum Master Discord. I have something called the framework. These concepts aren't my own. You can look up smart money concepts on your own, but hopefully I can give it justice in a nice manner. But here you go. This is the retracement, and when you retrace out of a drop or rise, you retrace back, and this is what the fib retracement tool is regarding. And so when you have something that drops, you go back and it retraces back into that price range. Why is that important? Well, that's the market maker trying to reprice to levels that were not efficiently traded for fair value. So you look for these fair value gaps. They're also known as liquidity voids. So what are they? It's when price moves with an explosive nature away from a price previously fair value consolidation range. And then that's when it goes to grab some liquidity that it's aiming at to liquidate on the long side, in this case here. And then it starts to retrace back up to that because shorts have left their shorts open. So, and if it didn't trade fairly, that means it didn't have time to go back and trade and scare them out of their trade. So they're just happy campers sitting there at that point. So they retrace back up to fill in the void. And then when they fill that void, they continue back where they were going. And we've seen it all before, like, oh, I should have held my short, or oh, I should have held my long. And that's because they do that to dupe out both sides. They induce the longs here to go take them out, and they scare out the shorts who were right to begin with. But they didn't give them the fear until they got to that point. So they gave them enough fear to scare them out, and then they continue lower. And so that's kind of what the candles I was looking at just a moment ago to here. There's a free indicator if you want to do that yourself. It's called the fractal break imbalance fair value gap liquidity void indicator, and it will automatically draw where they are. So on this 6 hour candle, it's in this red box here. That's all one big liquidity void on the 6 hour time frame. Now that's too big of a range to open up a trade at, so you have to get more specific. Where in this candle was actually traded down with no up? And so that's what I was doing just a moment ago. I was breaking it down into like 5-minute candles and stuff and finding where there was no wicks and no trading in that region. I'll just go back there and show you it once again. And so you can go into these regions, if you will. Whoops, I'm on a 5-minute time frame, so this might take a while. But yeah, you go back to these regions. I hope. Sorry. There we go. So you go back to these regions, and if you notice here on the 5-minute time frame, it went down, and then this candle after that went up to here, this wick, but it didn't go into this candle at all. So this point here, from this wick to, so you have to also mind the previous candle's wick. So from there to here is basically a fair value gap. Okay, so I made a little fair value gap bar there. So that's an area of interest from 110.52 to 110.40. That's a fair value gap on the 5-minute time frame for Matic. And so they moved out of that range, and a large amount of shorts are open there in profit that they would come back to. And then the same thing occurred here. And I think we went to a lower time frame, but the wick, I'm looking at the previous wick here. So that's why I say it's just that little range there. So those are the two, those are how you would look at fair value gaps and for areas of interest. And then we had that on the dollar, I think. Like we had, if I go to the dollar here really quick, I had those fair value gaps over here. Come on, bro. Come on, bro. Take me back, man. Take me back. So if you look over here, I drew these like green dots, and then these green dots, I previously had those boxes in there, but when they recovered them, so on the dollar, it went back to that region, and then it wicked off of that region. It went a little bit higher, but it wicked off of that thing that we had before it even got there. So we had these there ages ago, and then it went to those regions and reversed. So it goes to those regions, you know, it gets attracted to the void to fill in the void, to continue lower, to go back up. It's just like a thing that happens. And so you just kind of add that to your repertoire and start looking for where these gaps are and where they would coincide with strong reversal points, and they're likely going to be gravitational points for that retrace. I hope that answered the question. Nice. Fair value gaps, baby. So now we're coming back into this pocket, which coincides with this bullish trend-based fib level for the dollar. So you could see the continuation of the dollar's strength here on Monday. I don't know how they're going to absorb that Silicon Valley Bank thing. That's going to be kind of interesting to see. But that's about it for today. I mean, I think the charts convey enough basically here that, you know, Bitcoin could come back in to grab these small little longs that started up on this rise. If we go here really quick, you have 116 million down here. He's still in profit. If he doesn't close, they may be coming for this guy at 19.9. They have a 38 million, 39 million. They're starting to get a little bit more down here. So you see this black line that's probably above my head somewhere. It's right here. That's where the current price is. You can look just to the upside and to the downside, and you see what's nearest by. And we have this $38 million guy here at 100x. And, you know, we could go up to this region at 20,500 as well. But as it currently stands, you know, they could come back down here, but it sometimes baffles the mind how they leave it and then they just go back to the regions down here. But they have some other calculations they're looking at which say that they're probably gonna leave it open, so we'll come back for them later. So they let people survive only to come get them later. So yeah, seeing that there's more open trades nearby, they could come back into this region. I was just looking at the stochastic, but if you look at here, it's just this range here is slightly more red than just above here, but it could come down just a little bit and then go back up. This is so thick right now. But we've already looked at how the 3-month has this region down here too, so you got to juxtapose what's also in the immediate vicinity to keep them interested for some juiciness. That's like $100 billion right there. So while we're looking at the minutia of the 1 minute, that's why you can't get lost in one time frame and saying, oh my god, that's so delicious looking, but it's only like 300 million here and 20 million there, and so it seems like a lot because there's a lot going on, but this is also a lot too. So that's why price does what it does. It's inducing both sides and goes towards the imbalance, because it's just a game of traps through and through. Alright, ladies and gentlemen, I want you all to go enjoy your Sundays with your family and friends. Go have some coffee, go have some outdoor breath of fresh air. And I'll catch you tomorrow. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming in today, and I hope to see you tomorrow and the day after tomorrow and the day after that. Just keep doing you, and I will keep doing me, and let's do it together. I'll catch you on the flip side. Peace.